10 things you can expense as an investor. Stay tuned. Lots of money, like the green background behind, to save you in this week's episode. Promise you, it'll be worth it. Good day, Toronto. Welcome to another episode of Prime Property. So glad you could join us here. Nothing screams Halloween like talking taxes on Halloween. Yeah. This year is going to be my first year in a house in almost 2 decades since Halloween's going to happen. Unfortunately, I won't be around to give kids candy, but I can't wait because the few days after, all the Halloween candy is going to be on sale, and that's my favorite thing about Halloween. As I deal with a lot of clients on my day-to-day kind of trading, I get asked 2 questions quite a bit, even though I'm not an accountant. Can I expense this, and should I incorporate? Or can I expense this, with this being some kind of expense? So I'm going to take today's video episode to kind of break down what you can and cannot expense. And let me preface this video by saying I'm not an accountant. Even though my wife is a chartered accountant, it doesn't mean you should be taking tax advice from me. These are things I've learned from my investing journey and also talking to a lot of good accountants who are also investors. Without further ado, let me tell you the top 10 things you could expense as an investor. Number 1, the biggest one, interest. This is going to be your line of credit, which is an unsecured one, or it could be a HELOC, which is secured against your home, a home equity line of credit. And essentially, any interest you occur in terms of buying real estate that you use, you can expense. The major thing you have to be careful for is make sure you keep any interest that you use for non-related stuff separately. So if you're using your line of credit from a HELOC to, say, go on a family vacation, make sure you keep that separate because it's going to be troublesome for your accountant in the future. And mixing the two of them is definitely a no-no. Number 2, property management and condo fees. You can also expense any condo fees or costs associated with the management of a property if you have a property manager. And again, make sure you keep all the invoices and statements paid to date. Here's a pro tip for you guys. If you're really bad with paperwork, you can use an app called Expensify, or you can use an app called Everlance. You just take a picture of the receipt and you can leave it in the cloud for your accountant. I'll put a link to those to the description below. Number 3, accounting and legal fees. This one's fairly standard and you can kind of think about any legal fees you use for closing or any accounting fees that you pay for taxes or accounting related stuff for real estate investing, you can definitely expense. Number 4, property taxes. Yes, these things are big and you can write them off. Keep these from the city because it's a really big chunk of what you can write off. Number 5, repairs and maintenance. Now this one's going to get where it gets a little bit tricky, so I'm going to try to do my best to explain it to you. Any repair that is deemed as like a normal repair, such as like appliance repairs, general handyman, or just like general cleaning, this is what we deem as regular repair in nature. Now, any repairs that's deemed in capital in nature, and the rule of thumb is kind of like anything that has a life expectancy of over 5 years, then that's subject to something different and you should talk to your accountant about that. But these things are such as, the capital expense nature ones are kind of like kitchen renovations or brand new appliances. They're treated a little bit different and not as like an ongoing maintenance in terms of how you can expense it. So definitely talk to your accountant about that. Number 6, insurance. There's a lot of insurance and you have to get insurance to get mortgage, and all of those insurance, whether it be for short term, vacancy protection, rental damage, you can expense them all. So for peace of mind. So whatever you do with all your invoices, again, keep them so you can expense them later. Number 7, utilities. If you're providing an all-inclusive rent for anyone, whether that's for short term or long term, you can write off all your utilities that have to pay. Utilities includes things such as water, gas, hydro. Hydro is electricity, not water. It's confusing, I know. Internet bill, telephone bills, all of that can be expensed. Number 8, commissions. Any commissions you pay to a realtor, whether it's to sell a property or to lease, if it's an investment property, you can expense that as well. Number 9, advertising. Also kind of like the commissions. Anything you use, if you opted to not use a realtor, you can write off advertising costs such as like newspaper ads, Kijiji, Facebook ads, and whatever you use to advertise the property, including like signs and stuff. And number 10, any kind of travel costs. That includes gas, traveling, mileage and stuff. This is why I use an app called Everlance, because it tracks all my mileage. So all of that stuff you can also expense. Again, if you use Everlance, it tracks everything for you, and that's what I do. Now, those are the top 10 things you can expense. Now let me answer the second question in terms of, should you incorporate? This one is, it's so hard to explain, but like I'll try to explain it to you a little better. It's always a case-by-case basis and you should talk to an accountant, but generally speaking, I would say no. If you need to talk to a good accountant, I can connect you to one, and no, it's not my wife. She doesn't do any of this stuff on the side, but most people, when you think about incorporating, you're trying to find tax efficiencies. The main thing here is that when you incorporate, you have a harder time qualifying for a mortgage unless you personally qualify for it. Plus the down payment is also higher. So it's not the most efficient use of money. Then when you also add in the fact that you have to pay for accounting fees because it's a corporation and you have to create the corporation and there's additional legal fees, you have to make sure all those costs put together outweigh the tax, it's going to be less than the tax efficiencies you're going to get from having that corporation. And that's why every case is different. Because if you're a contractor, like a non-T4 worker, there are probably some efficiencies that you could mix together. And that's why you should definitely talk to an accountant. Now, those are the top 10 things and why you should incorporate. You can see that there's a lot of things that you can actually expense that's going to help you towards being more tax efficient by being a real estate investor. So if you're looking to get started, make sure you contact me. My screen will be my contacts will be on the screen right here. Until next time, happy real estating. Now that you're done watching this one, how about this one? Oh, you know what? This one's good too. Ooh, this one's really good. You know what? Just watch them both.